The 4-step method to high performance trading is a free download to help traders build their mindset routine to improve their trading performance in live time. The 7-step daily routine for high performance traders is about developing the daily routines and processes to help traders continuously develop and get 1% better a day in all areas of their life. They are both free downloads. The links are in the description box below. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. As we head into the closing last few days of the month, Thanksgiving Thursday, and the last trading day of the month on Friday, we're about to head into a new month. And a lot of the questions that have come up, I'm going to try and clarify some just really simple concepts regarding not only the opening range, the importance of new timing cycles, signal days though, how simple and reproducible the signal days are on any instrument, but more importantly, the idea of hunting out the best setups on any instrument, not trading your favorite one, and we're going to demonstrate why that is. But trigger days, signal days that can alert us to a potential setup, and then whether or not that setup presents in the session that we're trading for that parabolic opportunity. Now, a really simple way to understand this is we have a new month. When the new month starts, we have our opening price. The market, as it starts to auction between high and low, we have an opening range. The market pushes down into our opening range before reversing and giving us a breakout candle, a close and breakout. And that close and breakout continues, and we have 3 days of breakout traders triggered into the markets. Now that's a signal day. And when we get our 3 days of breakout traders triggered into the markets, potentially at a high of a month or a low of a month, that may offer traders the parabolic opportunity in the session that they're trading. Now, it may leave the station in Asia and you trade New York, which means we would be looking for the low-hanging fruit continuation. Or if we're trading New York and there's major red news, after the news, we may have the opportunity at the beginning of this move that's potentially going to reverse against the breakout traders. Now, obviously, we have major red news on the calendar. We talked about the first bounce opportunity if it's in line with a higher time frame, whether it's a low-hanging fruit. Again, if the train has left the station and we have our thesis in place from a larger time frame opportunity, we want to be able to position ourselves in line with that higher time frame. Now, often traders, once the first red day comes or the first green day, they don't get a trade the next day, and they're looking and they're trading inside and counting pushes and cycles and sweeps and confluences and all kinds of crazy stuff when we still are inside of a higher time frame selling candle. Now, this may, again, as the week unfolds or into a new week, a new timing cycle within the month itself, may offer us an opportunity again in line with our higher time frame thesis. Remembering that there are only 2 types of templates, and that's pump and dump and pump. So as our higher time frame thesis is potentially playing out, we may now have breakout traders caught up high. And so if this market's about to coil and explode, it's an ACB opportunity, depending on which session you're trading and when that opportunity presents, and depending on which instrument. So for example, we could have the Japanese yen. It might move in Asia. It might move in London. It might move in the US session. But staying in line with that higher time frame thesis is going to increase our odds of success. And when we get the ACB templates, a scalable 5-star opportunity. Now we head into our backside of the week, and again we see a similar pattern to what we saw on the front side. 3 days of breakout traders triggered into the markets, coiling sideways, and we have our inside day. Inside day near the low of the month. The inside day. Page 69 in the playbook. A signal day. And then, of course, as we head into the closing range of the week, we may have an underlying bias after our first green day into the close of the month. And that gives us our open, high, low, and close. Now, this obviously isn't going to happen every single month, but depending on if you're following just one instrument, of course, you're going to have different months and different types of templates. But there's simple opportunities like this every month where we have 3 days of breakout traders, front side of the month. We can have reversals, first red days, first green days, and then the underlying opportunity maybe 2 to 3 times in that month for scalable 5-star parabolic trading setups. Now, there's other instances where you may be trading your favorite instrument, and again, this is an example of how a month can just maybe go sideways within a trading range. But if you understand that breakout traders are still being triggered into the markets, we can look for opportunities when markets are either coiling for explosive moves or after they close in breakout. Opening range, initial balance. Paul Tudor Jones, when you get a range expansion, the market is sending you a very loud, clear signal that the market is getting ready to move in the direction of that expansion. Push lower, expanding the range and coiling for an explosive reversal. Now, whether or not that came on a news candle or if indeed it came as a clean setup with no major red news in any session is irrelevant. It's if you understand the type of template you're trading in, because this might be your favorite one, as opposed to looking at different instruments for which ones are offering the easy playbook trading setups, we can still look for opportunities off the high or the low of the range based on signals. Markets closing in breakout, traders will often confuse this and say it's a first green day. Now we're up at the high of the range, or a first red day, and we're inside of the range. Now that may have been the trade. Or they get a first red day closing down at the low of the month, and low of the week, and they are looking for a short trade, and they're trading down into the low of the month, and that's a trap. So again, you need to understand the templates and the setups that you're hunting. There are no such things as traps. There are only traders who are chasing moves and traders who are hunting setups. Now, for example, this market may have offered 3, maybe 4 opportunities in the month, but understanding they may be nail and bails because they're in a trading range, as opposed to the previous chart where we saw a month that broke out and reversed and failed and continued to trend to the opposite side of the range. Now, sometimes we're going to have months that just explode right from the start, and the month itself is an ACB. Every time they pull back, traders are looking for first red day, and the market just keeps breaking higher. And this is an important type of situation for traders to recognize, not counter trending an ACB higher time frame over the course of the month. This market continues to explode higher with each week, and traders who are trying to counter trend the underlying breakout are now potentially going to be damaging their trading account. Breakouts work sometimes, and so when we have this opportunity, traders again can align themselves with the higher time frame thesis. A lot of retail traders are constantly trying to catch the high or catch the low, and if you're counter trending a higher time frame trend, you're going to constantly be fighting the bigger money. And the goal is to align myself for an all-in day where the market coils into my session and it's about to explode and not come back. So if you can't seem to find a signal day, or you can't seem to figure out the structure of the market or count the pushes, just align yourself with the underlying higher time frame trend if indeed that opportunity presents in the session that you're trading. Now, this is an example of a month which I call a science project, because obviously we had a lot of volatility, wicks, maybe major red news. It was a template that you want to avoid. But that being said, we can still have opportunities present based on signal days, which can form at the extremes. So we have first green day, first red day, potential signal days. But then it's important, how does price behave on the day in the session that you're trading? So this may, again, with the first green day, offer traders a parabolic opportunity. We may have major red news. We've established a couple of boundaries early on in the month. And then we may have a signal day heading into the backside of the month that can help us form our thesis to position ourselves potentially in line with that higher time frame reversal. So just a fundamental understanding of stepping back, not trying to trade every little move inside, but waiting for the larger template to set up for higher asymmetrical risk reward. And setups where we have higher time frames driving them, and they're 90-10 and potentially ACB because they aren't coming back. Keep it simple, traders. Open, high, low, and close. When a new month starts, we have a new timing cycle. We'll have lots of opportunities, but finding the easiest template, looking for the best setups, simple rinse and repeat opportunities. Keep it simple and may the markets go with you.